Give us your thoughts on where the dollar heads from here then. Dollar weakness as a result of the defeat for the Republicans in the vote that never happened over in the US. I guess one of the questions is just how much read across is there from what happened on Friday into other areas of policy? And that's what I suppose markets will want to know.
Well, indeed, because, of course, last week was essentially a litmus test of the ability of the Trump administration to push through its legislative agenda. Now, in a sense, that first test has been failed, so the question is, what does that imply for the rest of the agenda? And not only that, also you have to remember, of course, that the healthcare process was aimed to try and reduce budgetary spend in order to facilitate some room for additional fiscal stimulus elsewhere. So there are two obvious headwinds in the context of the vote in terms of the ability to push through legislation and the cost implications, and both of those aren't particularly persuasive in terms of arguing towards that dollar strength story or the Trump reflation trade, which has obviously been very much underlining and dominating markets over the last 6 months.
Look, the Fed shifted gears dramatically to get us ready for the last 25 basis point hike. We just heard from Dennis Lockhart there, who used to be on the Fed. He would have adjusted his outlook to 3 moves. Do you think this moment of uncertainty around politics and policy perhaps slows the rhetoric down from the Fed? We get a feast of rhetoric this week. Do you think that this sell-off is now done in the dollar?
I think we have seen a substantive correction, and I think the Fed is going to be integral here because, of course, in a sense, we may be almost in a vacuum-type scenario where the data has still been remarkably consistent. You can argue about the validity of the growth story in Q1, but there's often headwinds in the Q1 data which generally resolve themselves over time. And when you look at the resilience of the labour market, we start to see some wage increases, and the underlying inflation theme and trend, I think that does suggest that perhaps the Fed could well be a little more, if not antagonistic in terms of policy, but certainly a little more vociferous in saying, well, actually, we're close enough to our targets to actually continue to push towards some degree of coordinated moves. And it may be the case that the markets are forced to bring forward that September hike perhaps to June. And that is the one catalyst which could imply that this dollar correction has largely run its course, at least in the short term.
And does that, to bring forward the hike from the Fed, does that require any further signs that Trump can get his fiscal stimulus policies through Capitol Hill, or can that happen just on the basis of the data that we already know about?
I think that can happen on the basis of the data. I don't think we need to rely and expect politics and the political machinations to really be a key or an integral part. So I think we're back to monitoring the data because, after all, central banks should be data dependent. That should be the key influence in terms of their policy prescription. And so if we are going to continue to see the labour market remaining solid, some signs of earnings growth coming through, inflationary pressure or the inflationary trends remaining supportive in terms of being back on target, then I think you can argue that the US at this particular point of the cycle, and of course we're currently in the third longest economic expansion in history as far as the US is concerned, and at this point in the cycle, a moderate ramping up of the monetary policy stance, I think, is appropriate. Not necessarily saying that we need more hikes this year, but perhaps just getting a little bit ahead of the curve and saying that the Fed have done their work, and then we can focus back a little bit more on Capitol Hill later in the year.
There was a note that I read over the weekend, and it came out from the director of Oxford Economics, and it said this: an overload of expectations and rich valuations amid global reflation mean that the dollar won't benefit much from positive surprises. So I suppose this sort of ties together. You think the faded move on the dollar is done, but this would suggest that even if you get a ramp of good data, it's going to be hard for the dollar to reassert itself. Is that overly stretching the situation?
Well, I think what I would consider is I think we need to sort of split it into two parts here. So we've seen a substantive dollar correction. We've seen it coming off. I think there is scope for a small rebound in that, but I think that's more. I think that's the way that we would characterise it. It is more of a rebound because, of course, if we scroll back all the way to November and say, well, if Trump hadn't happened and we hadn't seen the reflation bubble building through the course of the end of last year and beginning of this year, then I think the dollar's correction would have happened much earlier. And I think what we are in a very mature dollar bull phase. We've seen we're almost 6 years into a dollar bull phase, and that traditionally is getting to a pretty mature process. I think we've seen, and we're seeing one final sort of leg of that. We've seen a little bit of a move lower. I think we'll see one lift, but I think then we're back into a correction phase, and the dollar will cheapen up, and we will see other currencies like the euro reassert themselves.
So we need to take a longer-term perspective, not just think about this in the context of Trump's presidency.
Absolutely. Well, it's very easy to be myopic. It's very easy to worry about today, here, tomorrow. And I think if we can take that step back and look at some of those longer trends, then I think as we go through the end of this year and into next year, we will see a cheaper dollar.